This is a market review for February 20th, 2025. Today is Thursday. We had unemployment claims at 8:30 this morning. Today was that manipulation that I spoke about yesterday at the close of the video. All week I had been looking for this fair value gap right here, and today we hit it. We reached down into it, stayed above equilibrium, which in my opinion was my point of no return, meaning if it reached here and below, especially below this low, you'll see in a lower time frame. If it breached that, then we switched to bearish, right? But until then, I was okay with having it be a manipulation and not a actual bearish move on a higher time frame. Now, if we look at London session, 2 a.m. here, bullish expansion, then we level off. So bullish expansion, which means New York is likely to, boom, have a reversal. It'll be easier to see on a lower time frame, but you can see we take out this high before going low. As soon as I saw this buy side liquidity taken, I was ready to go short. Just needed my entry. Because my model, my bias today was bearish, right? A higher time frame manipulation as well as London session pointing that out. But the trade I took today was actually bullish, and I'll go over that once we get to the 1 minute. But because London was bullish and we took this high here, took this liquidity, I was then looking for a sell side move. We ended up taking this low, and this low, and this one right down here being the high end of that daily buy side imbalance, sell side inefficiency that we saw on the daily time frame. Now, because of this low and the proximity of this hourly fair value gap right there, the gap between these two candles, I thought, all right, if it manipulates past this low, that'll trip in street money to go short. Then we can reverse out of it and take it up buy side. So as soon as I saw this closure here below this low, I said, boom, manipulation complete. Now let's look to play bullish. And as you can see, that ended up happening. On the 15-minute, you can see it a little better. Here we are, 2 o'clock, consolidates until 3, then we rally, and then we kind of consolidate here. 7 o'clock is here, we play buy side, sweep this liquidity, not a single closure above it, above this high, and then we take off to the downside, take out this low, enter that daily fair value gap, manipulate down, and then boom, come here during the macro. You'll see on the lower time frame we reverse, and then kind of start drifting upwards for the rest of the day. Now on the 5 minute, there's quite a lot going on today. Forgot to speak about this in the 15 minutes. Let me go get that real quick. So here, 15-minute fair value gap. Difference between these two candles. Right. I don't believe, is that a volume balance right there? Indeed it is. So this is the fair value gap. So we get this validation, 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 validation. Plays bullish. So then it is validated as a bullish fair value gap. However, once we close below it, it then becomes a inverse fair value gap, which gets used here, obviously, to play lower. There. On the 5 minute, we have something similar up at the top. So again, London's rally, accumulation. New York took out these London highs. Again, plenty of time up there, but no closures above it. So that, in my mind, that signals a reversal coming. That, with everything else I mentioned, kind of sealed the deal. Again, fair value gap here between those two candles. validated here. We entered it, came out, closed, validated in my opinion. So we came back down, closed under this fair value gap, came up, tapped into it one more time, then we came lower. And this is the 15-minute you can see here. The 15-minute candle closed right here. We came up, tapped into it right there, right below constant encroachment, and then continued to, well, to tank. Closed within the hourly, which I liked for the bullish side of things. Successfully manipulated below this low. Got an expansion bullish. Unfortunately, we got stopped on this 5-minute fair value gap right here. Right at constant encroachment is when price retraced. You can see here the retrace on the 5-minute was roughly around constant encroachment, kind of just dipped its toes and then continued to play bullish from there. Now, this 5-minute, I was looking to continue to play me bullish, right? I was looking, boom, played bullish here. Here's this 5-minute. That was like my last line of defense because, again, you can see I entered down here. I'll show you on the 1-minute as well. But yeah, that validated. But then, as you can see, was keeping price down as an inverse for quite a bit. So came back down, retraced, started playing bullish again. We have this 5-minute inverse, which was validated here and here. Sorry, fair value gap first between this candle's high and this candle's low. The reason it's not on this low is because there's a volume imbalance between these two candles. So that's a regular fair value gap. And it's used bearish here once, which validates it. So it's used, and then it gets used here multiple times, keeping it the high, keeping it the high, close above it, come back down to it, and use it, boom, 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 the opposite direction. Oops. Another 5-minute here, but this time just a regular 5-minute gap between those two candles right there, come back down, close constant encroachment, as well as this 5-minute inverse expansion. Another 5-minute, look how price reacts off constant encroachment there, and then continues playing bullish. Now on the 1-minute, again, London rally, which sets me into the mindset of, okay, I'm looking for bears to start off the day. Accumulate, rally, take out these highs, and then immediately, like, we don't want to keep making ground above it. We sweep and we stay. We sweep and we stay. That's fine. I was not on the charts at this time, however. I saw this sweep and I saw this drop. I said, all right, I like these gaps here and here. If this was not market open, I'd enter. But since it is, things like this candle can happen. However, once we came down, retraced up at that, back to this 5-minute inverse up here, and that is when we really took off. So what I actually could have done, I don't know if I would have wanted to take a 5-minute inverse though. Oh boy. Could have done that, stop at constant encroachment with this wick here, and a little more leeway. And then played shorts from there. Now, is something that I would have done? Maybe. If I knew how bearish it would be? Well, it does make sense for it to be such an expansive day if my bias is bearish, because Tuesday and Wednesday were very low volume days. A big expansion at market open is understandable and possibly expected, so that's something I'll be keeping an eye on in the future. Yeah, expansion, taking out these lows. This one again is the daily fair value gap high. We reverse here during the macro. So here's where I entered. I entered off this candle. Let me walk you through my entry, what I was going through. So again, daily fair value gap. That was my target for earlier this week, but since we're doing it now, I said, all right, manipulation. that, as long as this 1 hour, as well as this 1 hour, sorry, inside the macro, which is a high likelihood of starting a move, boom, we hit it here, got good bullish expansion. I said, all right, I like that. I need confirmation. So price came down, boom, right here, reacted off of it bullish, closed right outside of it, validated it, in my opinion. So we closed it, boom, and then if we look at this right here, I don't know why this line is slightly off. That's where it should be. This is constant encroachment of this fair value gap right here. The way that price respects this tells me we're now bullish. Closures here, and as soon as we closed up above this, this fair value gap right here became a possible reclaimed bullish fair value gap. So I entered, I had a limit order set to this high, the high of this fair value gap. My break even, since this fair value gap here was validated here, I've said I'll go to break even once it closes above it, because then it can be turned into an inverse and price should respect it. So break even here, price came down, closed inside this one, so I said, all right, that's okay, that's okay. Made another rally up, and then we started to fumble and tumble. We're missing a candle here. We'll see. I'm sure it was something. I think it was actually one that just closed outside of this. Oops, what if we extend it anyways? There's a gap here, again, validated once, closed below it, hits it, and then we start playing lower. And this is the 5 minute that I was talking about where I expected price to hit it and then boom, come out of it, but didn't actually happen. And then I got stopped out at break even, which was in this candle, roughly right here. Came down, just one minute fair value gap, same one that reacted here, closures at the low, expansion, fair value gap, another expansion above it. This 15 minute here, this inverse right there, validated here, closed, boom, kept it. I think it's actually 5. Yeah, sorry. 5 minute keeps it. It's playing bearish. Close above it, come back to it, play support. SMT of these lows, as well as this inverse right here. Gap there is a sell side imbalance bias and inefficiency, so that's expected to play bearish. Constant encroachment reaction validates it. Come up, close. Entry would have been at the high of it. Stop loss would have been at constant encroachment of this wick right there, and I would have been looking to target highs because shorts were profitable for AM session. Another SMT here. Fair value up here, reacted off of it, could have taken that. Again, as you can see, if I get rid of this, 130 is when the macro kicks back in, takes out the nearest low, boom, before heading bullish. Still respects this fair value gap, but reacts off of it anyways. And again, if lunch is likely to continue the move that happened last before lunch, which was a bullish move, right? With this and this, sentiment had changed. Boom, hit that, started playing bullish, taking out these highs, take out those highs, retrace to this 5 minute down here, another expansion, 5 minute down here, and then here we are continuing the move upwards. So for the rest of the week, I am looking to simply just take out these highs. I want to make new highs for the week, have this down here be the manipulation, and then have an expansion. So whatever Asian session and London session needs to do to make me play bullish on New York is what I'll be expecting to happen overnight. Now usually I look for a 20 to 30% retrace of the weekly range on Friday. However, this is not an expansive week, right? This is a very small week. So there is no retrace to be done, which means it's just like a regular day. So I'm looking for an expansion to come out of it because small day, small day, small day. We manipulated, and so now I'm looking for a big expansion above these highs. Again, bias can change in a session, right? Like today I was bearish, but then I switched to bullish. It can also, and it most likely has the highest chance of switching after overnight happens. My biggest tell onto how I'm going to play the markets is what London session did. So all depends on London, but as of now, I'm looking to see a bullish expansion above these highs. So we'll have to just sit back and watch. This has been your market review for February 20th, 2025.